this video, I'm going to explain why gold is not a store of value. Now, probably since you were born from the age of your mom's womb, you probably have heard the old adage of gold is a store of value. And I'm here to tell you that I completely disagree with that. I completely disagree with all the gold bugs, all the silver bugs, all the old heads within the market. I'm here to redefine and reshape and plant a seed in your mind and show you exactly what I'm talking about. Now, first, we are going to define store of value. So I just looked it up on Google. A store of value is an asset, currency, or commodity that maintains its value over a long period of time. Items that are considered stores of value either increase or remain stable in value over time. Using this wonderful chart from TradingView, I'm going to quickly highlight why gold is not a store of value. Here in the 1980s, gold reached $800. And for the next 2 decades, gold would hit a low of around $200. Over a long period of time, gold did go down in value. It wasn't until the early 2000s, the 2001 financial crisis, gold started going up in value, which you can clearly see here on this chart. And not only did it go up in value, but it would go from $260 all the way up to $1,800. Now, as far as I'm concerned, that is not the sort of definition of store value I have in my mind. To add another definition into your vocabulary to highlight why gold is not a store of value, tail risk is the chance of a loss occurring due to a rare event as predicted by a probability distribution. So essentially it's basically saying that any asset within the market at any period of time under the right conditions can go down in value. Going back to this chart here, you can clearly see that gold went down in value. And it wasn't just because of some weird rare event. It went down in value for a long period of time. To say that gold only goes down in a rare case scenario, that is false. There's been multiple examples, even as of late in the previous decade, that gold goes down in value over a long period of time. Now, gold is currently trading at $23.48 as of me recording this video. So since the price of $250 or $60 in the 90s, gold has gone up in value pretty significantly. So you might say, well, why is it not a store of value? And I would say that the reason gold goes up is not because it is a store of value. Yes, technically anything could be considered a store of value. Anything that you can put money into and get money out of is a store of value. A lollipop could be a store of value. Your grandmother's ring could be a store of value. It doesn't really matter exactly what it is. By definition, anything can be a store of value, right? And most people believe that gold is sort of this main central hub to hedge themselves against the market in certain societal conditions. So now that I've kind of outlined some basic things here, I'm going to go to paint and quickly draw out to you why gold is not a store of value. And I'm going to put store of value next to it in red because color of fear. And how do you say? Most people associate store of value or gold in a situation of fear. And to be fair, part of this is true, right? As I mentioned earlier, any asset could be considered a store of value. So when I say gold is not a store of value, I'm saying that the way you should think of gold needs to change. So you have sort of this overarching price action that occurs in gold, right? And that is the store value, a way to hedge yourself against the market. But the question then becomes, is this the only thing that gold has, right? In the past, for many decades, this was the only argument that gold had, right? Buy gold, it's a store of value, it's a hedge against the US government, right? Inflation, money printing. We began with a store of value, the most basic principle of any asset. I mean, the tulips back in the Netherlands would go up in value because it was a store of value and because it was mystic, right? And then it crashed all the way back down and bankrupted a bunch of people, right? But now we have technology, and the technology that we've been using is not something that is to be going away, at least right now. There are some vulnerabilities, of course, but we have used a lot of resources to build out the infrastructure that we currently have. Then on top of tech, we have artifacts, which is also a form of consumable within the gold sector. Your rings, your earrings, your necklaces. Many cultures, many societies, they use gold in their artifacts, jewelry, so to speak. But regardless, it's still a layer of value to gold. Now, historically speaking, artifacts, store of value, have already been priced in. It is tech that currently has not priced in gold and silver, right? And when I say tech, I don't only just mean like what your phone uses, right? A lot of Apple phones have gold and silver in them, but as well as the military, right? Military technology uses a lot of gold and silver. So you have an increase in demand, right? Simultaneously, you're having a decrease in supply within gold and silver, mainly due to supply chain issues and the cough and this, that, and the other. So you have an imbalance, right? Now, I know everything that I'm explaining here seems self-explanatory, but again, the reason I say gold is not a store of value is because that is not why you're trading gold and silver as of right now. Artifacts or jewelry is not even why you're trading gold and silver. I would even argue part of it is not even because of tech, right? I think right now in gold and silver, you're experiencing a mechanical aspect of it, right? The dynamics of gold and silver need readjustment. So you're probably sitting here like, well, this is all self-explanatory. You haven't really explained anything new to me. Like, you haven't really explained why gold is moving up all of a sudden. Like, what you're saying, it's short squeezing. Yes, but there are many things behind the scenes, many layers on gold and as well as silver that you can add on top of these precious metals. And I want to highlight the importance of it and get your mind to move away from the store value, right? Every investment has certain points as to why people invest into that investment, that asset. Store of value, that is something that has and always will be a thing of gold, right? It's sort of an underlying stream or river that flows underneath the ground of gold and silver. It's not really going to go anywhere. Jewelry, artifacts, this, that, and the other, though, along that class asset sort of within gold, right? Those are always things that are going to be there. But technology, the thing that we're currently experiencing is not something that we experience in human history and human civilization every so often. It's not a repetitive thing. We are in a unique stage within sort of societal dynamics, technological dynamics, purchasing dynamics, mechanics of the market itself will drive up gold, the asset. Now, I want to quickly show you something. This little box down here that you see all the way at the bottom of your screen, this is when I started following gold. This is when I became a serious trader and I really started to follow the market. This is in October of 22. Gold was trading around $1,600. Now, looking at the current price, gold is at $23.48. And I believe that by the end of this year, gold will be at $3,000. By the end of the decade, I believe gold will be at around $5,000, which may seem very preemptive, of course, and generally when gold goes up that much in value, it's not a good thing. But the reason I bring this to your attention, right, is that you need to understand, right, the moves that we are about to see in gold are not moves that we see very often. This is a sort of once in a lifetime thing. I'm sure there'll be a period and a time when gold will level out on a long-term scale, kind of like it's done in the past, and how do you say, you'll be catching the falling knife. In this current day and age, we are at the precipice of gold really moving upwards. Is that a good thing? Probably not. Probably for society, it's not a good thing. But how do you say, gold, it's something new, right? It's something that is attached to almost every aspect, right? From political to economic to technological to societal to cultural to financial. Gold has a tie to everything in our society right now. So it is not just a store of value. I know that I might not have made the point very clear, but Move your mind away from the idea that gold is a store of value, right? That is what the people that is what the people who hold the gold and silver and want to purchase gold and silver want you to think. Move away from that idea. Move away from it. It is not. Okay? You can come up with your own reasons for it, right? I could sit here and create an hour-long video, give you all these statistics, which I'm not going to do because there's plenty of other videos who do that for you. If I pulled up all the things that have been posted, all the articles, all the data, right? I could pull all that up for you, but I'm not going to because it's already out there. You can research that for yourself. But the point is, think about it by yourself. Think of it on your own, right? It has to be something that moves in your mind in your own way. It is not something you can attach yourself to. It is something that must attach it to you. I know this video might have been a little bit weird, but I hope it did help you a little bit just to kind of change your perspective on gold, to expand it, to add a couple of layers to it. That was really the goal of this video. So, without further ado, guys, until next time, peace.